Strong earnings from tech giants like Alphabet and Microsoft have been boosting stocks. So will Facebook also deliver when it reports its results after the closing bell today? Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management, joins us now. Doug, great to see you as always.
Good morning, Jerry.
So Facebook. This company, it has a gaffe every week, right? Cambridge Analytica, and yet the company still doesn't seem to stumble in terms of its stock price, in terms of its earnings. What are you expecting today?
We think it'll beat the estimates, but look, it's up 20% from that time, and up about 40% for the from the lows early in March. So it has come a long way, and I think some of the earnings expectation are built into the stock price already. There isn't that much room before it gets above valuations.
So for earnings, we're seeing a 30% bump on the bottom line, a 43% gain on revenues. What's fueling all this? Is it Instagram? Is it WhatsApp?
Yes.
I mean, how do they make these improvements over and over again?
Yes, I think that they're monetizing when they first went public, everyone was concerned how are they going to monetize the mobile platform. And I think they figured that out in spades, and now it's transferring over to the Instagram, where a lot more people are going. At least the younger people are much more focused over there, that's for sure.
And some of the older people, I'm on that too.
Yes.
Let's talk about Colin Stretch, though, because this is the company's attorney, a key part of the company's, effort to protect itself from all these federal investigations. He's resigning. That's the second high-level resignation in probably 2 months. Elliot Schrage left. What does that tell you?
Well, I think they've got some concerns about how they're going to handle all the fake news issues that they've been put up against, and I think they've got a problem with that, and I think they need to do some things. So whether or not some of this was a combination of personal or things need to move in a different direction, the guy was on a different coast, so I think they probably need somebody a little closer who can handle things a little bit more clearly. But they do need to get things under control, or they're going to have some further slip-ups down the road and not continue to grow the way that they have been. That's for sure.
I want to ask you quickly about Amazon. It's not coming out today, but tomorrow. And I was looking at the EPS estimates. They're up 520% year over year for the quarter. Phenomenal. This is another bulletproof tech stock, or seemingly so. What do you expect from Amazon?
Yeah, Amazon is just that company that probably will take over Apple at some point in terms of being the largest company in the United States and therefore the world. It's hard to like this from a fundamental standpoint, going all the way back to when there were no earnings. It's very hard to fundamentally like it. It's way above fair value, but you cannot take away from the fact that whether you're a capitalist or a socialist, it doesn't matter. You're ordering stuff on your iPhone. It's showing up tomorrow via Amazon.
It's about the money. It's not about the politics.
Exactly.
So just to fill out something you mentioned earlier, Amazon and Apple are in a race to be the first company to hit $1 trillion in market cap. Lay your bets now, my friends. Quickly, we have just seconds left here.
Sure.
I want to ask you about these universal savings accounts that they're talking about putting in place, the Republicans. Are you pro this idea? This would essentially remove a second layer of taxation for savers.
Yes. So I'm one of the biggest fans of Roth IRAs, which this is really an expansion of, but without the limitations for perhaps income or perhaps the limitation of using it solely for retirement. They'd be much more freer. I do know people from Canada, and they love these, and there's a much higher participation rate. And so if this is any way a copy of that, it'll be fantastic and great for people with savings and for their future.
All right. Well, we need more savings. That's for darn sure. Doug, thanks for that. Good to see you this morning.
Absolutely. You too.